welcome to the closing beat, everybody. Happy Thursday. How we doing out there? We got a little Halloween thing going on. That's pretty cool. And then there's this guy over here. What? You know, and we got this guy here. Got special glass tonight with the blood stuff. I don't know. We didn't do that last year, so yay, Halloween. Welcome to the closing beat. It is Thursday. We're going to go over the stock market here today, teach you some new stuff, and of course, maybe share some things with you that you didn't know. Actually, I can promise you I'm going to share something with you today you didn't already know. And we like to look at things a little bit deeper around here. We're very much numbers-oriented. Opinions are fine, of course, and supported, but we like to look at the data when it comes down to making decisions. My background's a fund manager, so obviously I have that sort of analytical approach. Not the smartest guy in the room by any means, and I do make a lot of mistakes, but I'll try not to make any mistakes today. I hope you'll check us out at jazzwealth.com. We manage our own portfolios, actually, for customers, rather than just picking out a mutual fund and you pay whatever they have and all that. We have no expense ratio, so hope you'll check us out. Transfer over to Jazz. Man, that looks good. It was great, right? I can't even focus, man. I like it. In a little bit more. Anyways, let's get started. The stock market was a little bit higher today. Did you see that? That is what we're here to talk about. If we go over to the charts, well, Nancy Pelosi said we're closer to a deal. Actually, her words were, we're just about there, kind of teasing us again between both sides there with the progress that they're making. Nonetheless, the market said, all right, good enough. We'll start bouncing a little bit. The S&P came off the 50-day moving average, but it was not the best performer today. The Russell 2000 was the beast. Beat every index out there by a factor of at least 2. So double the performance over there, looking good. Today it was healthcare, biggest contributors in the Russell 2000, followed by the banks. If you look at the Russell 2000, small cap value was the big performer, 2.1% over there. And the Russell 2000 has recovered now more than half of its pullback, which the other indices cannot say that. If we go, the Russell is about a 1% away from being positive year to date. If we go over to the S&P, it was a good day for that one, and it did it without tech. Actually, technology was the second worst performing sector, losing about 0.5% on the day. And because of that, you had like PayPal pulling back, gave back almost all the gains from yesterday. Apple pulling back just a little bit, not bad. I don't think that's a bad one today. And Nvidia also pulling back. These are some of the bigger, larger market cap type stocks that have been pulling back and continue to pull back there. Today, the leaders were in healthcare. You had healthcare helping out today, about 1.5%. Mentioned that the other day. I like healthcare here. I like the way that's setting up there. It's not great, but I like it compared to a lot of other sectors. Also, banks out there as well. We'll cover that here in just a moment, but that's the S&P for you. If you look at the NASDAQ, that was pretty much held back today by the FANG names. Not all of them, but FANG names held them back, and generally tech in general, down 0.5% on the day. Not bad declines, though. I don't think it's anything to freak out about. It's just a little bit of a move lower. You also had Tesla, of course, with their earnings. Gave back almost all the gains on the day. They were the biggest contributor because of their earnings. And good old Algen. I'm starting to like me some of these tech stocks now, these biotechs. You got Algen up here. Counts as a biotech stock. We happen to own it, up 35%. And to be fair, I'm going to share some other stocks that they did well today, but they haven't been doing well for us, because I always feel bad. I don't like to just point out the winners. You got to see some. We learn from things that we struggle on, right? So if you can share some of the tough positions, you learn more from that. Picking a winner is just sort of luck, right? But anyways, you got a 35% gain on Algen, looking really, really good there. That's all earnings related, and so congrats. That's in our large cap fund there, so that one's doing really, really well. And happy to see that. Otherwise, that's basically what you have if you're looking at the NASDAQ there. So I mentioned Algen being earnings related, Tesla being earnings related. What we have is, if you don't know, we're in the middle of earnings season. Actually, we're at the very beginning of earnings season. And what I like to do is update people on how earnings season's going relative to history. And there's a really interesting sort of thing that's going on right now. Actually, if we just cover earnings season real quick to talk about how it's the performance of the market and individual stocks that have reported relative to history. Are we doing better than average? Is this earnings season a good one, a bad one? It's really early. We've got about 85 names, not including the names that reported today, that have reported on earnings. And if you would, I'll show you this here real quick. Here's what we got. We kind of have a weird thing going on here. This is the current beat rate on earnings of the stocks that have reported. Like I said, it's only about 85 names there. There's a ton more reporting that this will certainly change. 83% of stocks have beat on earnings. The historical average is 68.1. This is looking back 20 years here. So we tend to average at this very moment in earnings season, just a couple weeks in, we average about 68% of stocks beating on earnings. We're at 83. If you look at sales or revenue in this case, if you want to say it that way. Typically, 54% of stocks average a beat on revenue relative to Wall Street's expectations. We're currently sitting at 80%. So that's good news. You think, oh, all right, that's awesome. We're beating what everybody expected that these companies would do. Here's the problem. If you look at the performance of these stocks going back here, the average performance of the stocks that have beat is only 0.46%. That would be the day following earnings. So let's call it a 0.5%. So the average gain is a 0.5% when typically, even though that's spelled wrong down there, Mr. Cody producer, you have the typical average is 1.3%. So here we have the stock market, stocks that have reported earnings are doing much better than expected, but the performance of the stock is doing much less or worse than expected. And so we have this situation where either investors are not interested in going and gravitating towards those names, like we haven't hit the big names that are exciting yet, or people are saying, yeah, but I didn't think that it was going to do that. Wall Street may have expected that they were going to beat, but we all sort of assumed it maybe, and that's why the performance is a bit muted. So it's a really interesting sort of thing going on right here. Where we're at. So 83%, like I said, 83% of stocks beating on earnings. That is the second best performance in the last 20 years. You got to go back to 2006 to find better performance that would have actually been 86.4% at this very moment during earnings season there. So it's kind of already a bummer, right? The stocks are really performing in terms of their fundamentals, but the price performance just is not kicking in. So that's kind of a fun, quick way to look at it as we currently stand. All right, if we go over to our videos this week, we got some great ones actually, and we have some really good ones coming up. I had some great suggestions from you guys in terms of really geeky things that we can do, but simplify it and make it easy to understand. Monday, we talked about paying 401k fees. Should you be worried about those fees, and would you pay more for better performance? So I gave an example and showed how that works. Yesterday, we did withdrawal strategies. Very important for those of you that are retired or very close to retirement. Taking out your money is more important than how you saved your money. I really do believe that. Especially with not knowing like the next president and how tax laws are going to change and everything. Anyways, tomorrow we'll wrap it up with an easy one and kind of simple 4 concerns that we found through our investors of now over 3,000 customers that have had many questions along the way, and I get to hear the concerns, notice patterns, recognize where people maybe are getting stuck, so we're going to cover that. Our Wine and Wealth class tonight will be a special spooky Wine and Wealth, yeah, because we got stuff back there. Oh, actually, it'll be over there in the speakeasy. We're going to be talking real quick because I know there's a debate tonight. So what we're going to really quickly do is show you how to see the types of investments you should have in each one of your accounts, but more importantly, how many dollars do you need to have towards each asset class to specifically hit the goal that you have. Not a general class. This one's going to be specific to your goal. So should you have $10,000 more in stocks? Should you have $8,000 in REITs? Should you have $5,000 in international? How do we perfectly efficiently calculate that? So we'll go through that in our class tonight. Hope you'll check that out. And of course, our research site. There's a lot of good things there and upcoming jazzwealth.com/research if you want to check that out. It's $13 a month if you can't be a customer of Jazz, and we basically share research like some of the things that I just shared with you already, and we'll be sharing with you in just a moment. I didn't do it. Play Guess the Dow, man. jazzwealth.com/guess the Dow if you want to take a shot. If you're closest without going over in guessing, telling me where do you think the Dow is going to close. We don't keep your information. We won't tell anybody if you guess really badly, unless it's one of us here. But yeah, if you win, we'll give you a $100 gift card. If you're one of our customers, we'll send you $100. Let's go over to the sector breakdown here and take a look at what's going on today. Take a drink of my juice, my little blood juice there. All right, moving on. We've got energy here. What a day today, which is kind of sad. I just emailed a customer and said, I don't know, I think this WMB is going to break down. I was wrong because it broke out. Anyways, energy, a really strong move today. It was the best performing sector by a factor of 2. So it was up about 4% today. The next best sector was financials, only up 2%. So looking good there for energy, a much needed rally. Now, naturally, you're going to have some of the bigger weighted names. ExxonMobil up 5% on the day, good stuff. Chevron also up about 3.5%. These have been some laggards there, so kind of cool to see that. If you look at the XLE, which is the energy sector ETF there, all but one stock gained more than 1% on the day. So everybody basically participated today in the space and in a good way. The best performer over the last month, if you look back, is going to be ONEOK. It is the best performer by a factor of 5, and today is no exception. That stock, it wasn't the best performer today, but it was up almost 8%. So that is the energy sector. Financials here had a great day, up 2% on the day. Second best performing sector. However, regional banks smoked it again. So I've been pointing out for 3 weeks now, regional banks are sticking out. They're sticking out. Something interesting is going on with regional banks there. Don't know what it is. They're all waking up. They're all taking more interest than the larger financials, which would be the XLF if you're taking a look there. We even went as far as to post that on our research site and talk about the banks in general. So I'm going to go over to so you can find it here. Where is it? Well, financials bottoming here. So this post here, we did this earlier in the week to kind of break down the financials by category. So if you want to go inside there, we actually went through and showed the regional banks, the asset managers, things like that, performance and volatility, just to kind of point out the different ways we're seeing signs of life in the regional space. And today, they were the best performers there. Now, to be fair, one of our best performers today in the regional bank space was Heritage Bank. Heritage Commerce is the name of the bank, HTBK. This is not one of our best performers overall. It has been near lows for some time and been quite weak. So I want to be fair there. We're happy to see it moving higher today, but it wasn't one of the best performers. And another one is People's United. We are very happy to see this moving higher because it's been a laggard. It's been one of our underperformers there. And so hopefully this is the start of something good there. And that is the financials for the day. Looking around, we talked about healthcare already, moving back to highs, one of the better looking sectors. Looking at utilities real quick, we talked about this the other day where it was nice to see it not pulling back. Everything else was pulling back and utilities weren't. That's a sign of relative strength there. Today, people recognized that and finally caught up to us and started moving higher there. So up 1.5% on the day. Utilities looking really good there. Happy to see those moving higher. We mentioned retail as well, pulling back here in the midst of the uptrend. It did fall this morning. People said, that's good enough. We're back down to support. Got a little bit of a bounce, finished up 1% on the day. And lastly, communications services. It was a little bit weak. Let's go over to industrials. Nice, strong uptrend in industrials today, almost adding 1% as well. That's your sector breakdown. Going over to new highs, new lows, we got 19. That's what that thing says, 19 new highs and 1 new low. Unfortunately, that's going to be Gilead. So Gilead broke to new lows today, then rocketed off the lows as the FDA approved remdesivir as the treatment for COVID-19. So a good little response from them. It was a quick reversal after hitting 52-week lows. That is the only 52-week low there. Down 6% on the week. That's going to be a little bit better after the afternoon rally, and down about 7% year to date. So it's got some work to do to recover there. Moving on, you got Gap. What a great move in the Gap today. Not typically a stock that gets a lot of attention, but up 13, almost 14% on the day. They said that they're headed back towards a path of profitability, and that includes closing some stores, working more online, being more efficient. Investors love to hear things like that, especially when they come true. And Gap said, you know what, it's not going to take us that long. We're going to get this done by next year. So good, strong boost for that one there. Looking at Hanes Brands here, this is a breakout trade that we looked at a while back. It's just continuing, nice and strong and slow and steady, not too fast. That's the key there. So I thought that was interesting. Estee Lauder hit new 52-week highs, but it faded. Right? Not too exciting there. So that's good. It didn't get ahead of itself. We happen to own it. We don't want it to get ahead of itself, like a Solar Edge or something like that. So looking good over there. And the last one of the strong ones here, CSX. The rails have been the stronger performers inside the transportation industry and inside the industrials sector, if you're looking. It blasted off today on earnings. It beat by 3 cents overall. They're doing a $5 billion buyback, and the stock added about 4% on the day. And that's what you have for the notable new highs of the day. All right, are you ready for this? We're going to go over to, where's the button, man? We're going to go over to our watch list. Aha! There it is. Okay, yesterday, someone brought it up, and I thought, well, let's just keep going with this. Solar. TAN is the ticker symbol if you want to look at the solar industry. Yesterday, it pulled back quite sharply, and we talked about, just very quickly, staring at this all the time, you kind of pick up on things, that maybe it takes other people time to learn, and you just have to see it enough. And I'm not the smartest guy, but the more you look at something, the better off you are. You ever go to a mechanic, and the mechanic's like, what's wrong with my car, man? And he looks at it, and he's like, it's the second piston. I can tell already something's wrong there. How does he know that, right? You see enough of them, and you learn. Well, yesterday, the solar stocks pulled back, and we said, well, look, a lot of these have been really extended, and so it's a natural pullback. There was no news. There was no reason for anything to happen other than for people to take their profits because these stocks and this industry are very extended. So the question becomes, how do you know that? How can you look up that or figure that out for yourselves if you don't stare at it every day and can't quickly realize that a lot of the stocks in this area are overbought? Well, here's one thing. I'm going to go through a couple different things here to show you. First thing is, we ranked the solar stocks in the TAN ETF by performance year to date. What you can see sort of clearly is the biggest gainers year to date were also the most extended, by the way. They were the ones that lost the most yesterday. So the green line is year-to-date performance. The red line is just yesterday. That's how much some of these stocks fell yesterday. You got JK Solar down 21% in one day. It was one of the bigger gainers on the year. So if you were to sort a list and go, let me see it, let me visualize it, the biggest gainers year-to-date were the ones that pulled back the most. The smaller gainers year-to-date had very tiny little pullbacks. Look at that, it's next to nothing, but the bigger you get, look at that, all of a sudden you've got 10, 13, 21, 8, 12, 17. You've got big pullbacks there, and that's a way to basically see it without realizing, and to realize what's happening versus just looking at a chart and digging through all the stocks and hoping you get it right. Well, this may not be as clear. Some people like to see tables. So what I did is I put together a table to kind of show each one of these stocks in a column format. So I'll take a second to go over this here because this is, I think, kind of interesting. We've got the ticker symbol, the name of the company, in case you don't know who they are. We went through and put the change, the gain or loss, which they all lost yesterday, and then the year-to-date performance. Color-coded them so you could, we ranked them by year-to-date performance, so you could see that the bigger gainers year-to-date were also the bigger losers, and as you go down to the smaller gainers year-to-date, they were also the smaller losers. That lets you know that those really strong overbought stocks were the ones that took all the beating there, and they're also, some of them happen to be more heavily weighted in that sector, or ETF. Okay, also, we focused on price to earnings as well. Put that in there. Some of the stocks that are trading above average relative to their peers there were also the ones that sold off. It's not a good metric because some of them didn't, and not all of them have earnings. Some of them lose money, so they don't actually have a metric for that. Just for fun, I put the dividend on there in case you were interested in that. The higher growth solar stocks that don't pay dividends were also the ones that sold off. These guys growing like crazy here, they don't need to pay a dividend at the moment, and some of them can't even pay a dividend. We also then look to see what about earnings growth? From a fundamental standpoint, is it the companies that are growing fundamentally faster that fell, or is it just stock performance purely? So we looked over here and we said, okay, any of them that have strong earnings this year and also are expected to have strong earnings next year, were those the ones that sold off? Not really, right? I mean, there were some stocks that have great earnings this year and proposed to have them next year, and they haven't been that great of performers this year. Some of your triple-digit gainers in terms of earnings, well, okay, they have done really well. They're also overvalued, and they have pulled back larger, but it's not enough of a comparison. Also, volatility. We said, well, did the more volatile stocks pull back more? Yeah, you could argue that because the least volatile stocks are trading towards the bottom. So by putting all of this on a column, I could very quickly look at this and go, I don't really see a correlation here. Nobody's interested in that. I kind of see a correlation here, but that could be just attributed to their growth. What I really see is that the biggest gainers year to date were also the biggest losers yesterday. And we look at it like this because there was no news. We can't say that one company went bankrupt, right? It was that kind of a big move. We can't say that some big analyst or Warren Buffett decided he would never touch solar. Whatever, some big investor. So we have to realize like what's going on. These are the bigger stocks to pull back. And if you look at them today, they're also the most volatile today. I looked through a handful of them. They're pretty volatile there. So that's a quick way to say, well, hey, let's go over here. Hey, I'm looking at, I don't know, Solar Edge, right? I can look at that and say it's due to pull back, and it's not going to be pretty. It's extended and all that great stuff. You may choose to use either a chart where you can see the performance like that, or use a table like we shared with you. And so what I'm doing is just throwing out different ways to look at price action, and you may find that you like one more so than the other. I also listed off the stocks off there to the right-hand side of your screen so you can see some of the names that were on the list that we were just talking about. Hope that helps. The goal is to simplify, right? We're trying to simplify how we look at broad, sweeping data without going crazy and like, I don't know, just pick one. Oh, we want to make an educated decision there. All right, so that's that. I hope you enjoyed the watch list for today. All right, we're going to take a look at stocks in the news. Yeah, let's wrap it up with the stocks in the news there and get ready for our Wine and Wealth class tonight. Okay, here we go. Whirlpool. This is going to be earnings related. They beat on earnings by $2.71. It beat by a mile, to be honest. Raised guidance. Everything looks good for Whirlpool. Earnings was 65% above expectations. Revenue was 11% above expectations. Guidance was 30% above expectations. You had a blast off to start the day, and it faded away there. Maybe a little profit taking. I didn't catch anything negative there, so I'm not sure what the problem was. Discover Financial. This is, to me, very, very interesting. Up 10% on the day. Discover earnings 55% above estimates. I go, why is that? What happened? Why is it 55% above estimates? Well, I don't mean to like do the whole like horn tooting kind of thing here, but take a look at this. Where are we looking? Hold on a second. Best read with a glass of wine. So let's look and see here. No. We're going to go a little bit further. How these rates affect your dough. So it was a post that we did that was not really, wait, is this the one? Yeah. So what we did is we actually plotted this. Oh, it's not going to be all the way on. Can I do this? That's a little bit better. We looked at credit card companies there, and then we actually plotted out the percentage of credit card accounts that are being charged interest. And in this research post, we were actually sharing how there are now more, it was greater than the 20-year average credit cards that were being charged interest. And I made the point to say, what do you think would affect, what's going to be the outcome of this? Well, it's going to be that the credit card companies make more money. So just to look at it, today we got Discover Financial. Earnings were 55% above estimates, and they said themselves, driven by higher margins. They broke it down to say, we're making more money on balances on credit cards. Charge-offs and 30-day delinquents were down across the board, so people are actually able to pay this extra money. They're carrying a balance more so than they ever have in the last 20 years, and that is the reason why that is up 20% today. Discover's up 10% today. I thought that was so cool because we did this earlier in the month. That data point came out earlier in the month. We plotted it just to show you. Quick post in the research site. That's one where I'm going to say, all right, we told you ahead of time on that one. That was pretty cool. The others will be reporting earnings coming up. Keep an eye on those. Great performance on Discover today. We happen to own it. Obviously excited to see that and should own it because of the data, right? The data says they're making more money. You know that ahead of time. You got to dive in there and do it. All right, Tesla beat on earnings 38% higher than expected. Revenue came in 6% higher than expected. Free cash flow, which is important for this company, up 26% higher than expected. Gross margins went from 22% to 27%. And by the way, that's higher. I looked up real quick. That's higher than Ford, General Motors, and Toyota. Really good. That was good earnings report there for them. Southwest Airlines shares were higher by 5.25% on the day today. They said, you know what, we lost over $1 billion last quarter. We're going to have to start selling the middle seat, guys. We got to do it. I don't blame them because if you look at Spirit Airlines, which hasn't performed as well, they've been selling the middle seat for months. I went to Ohio like, a month and a half ago. Every seat was filled up, man. I mean, the middle seat was filled. Sat next to some guy, he sneezed all over me, and I got the virus. No, that didn't happen. But Southwest Airlines is going to start selling the seats. That helped the airlines there for the middle seats. I don't know if it helps, the cases and all that, but we'll see. AT&T, great day today, up 6%. It's been down 10 days in a row, actually. Earnings. That's going to be earnings related there. They missed on earnings there. Revenues came in stronger than expected. Wireless subscribers up and HBO Max activations were much higher than expected. The stock gained, call it 6% on the day. And that's what we have for you there. Okay, earnings tomorrow. It is Friday. Typically, you don't have a lot of earnings, so the big names there. You got American Express. Oh, interesting. Illinois Tool Works coming out, and Caterpillar paying $1.03 in dividends there. I'll take a chance to try to answer your questions, and then I will get ready for our class tonight because we're going to make it quick but awesome. I love it. I love it. You do. Oh my God, I've never had a balance on my credit cards. It's so disgusting. Yeah, I agree with that. There's no reason to pay 18% for something. Like, this is the one time in life where you're like, 3%, 18%, what's going on here? So I think Americans in general are starting to turn the corner on credit cards. That's what I hear anyways. Whatever. I love it. I love it. I love it. Thoughts on, whoa, Giovanni, what's going on there? Thoughts on a FedEx 295 call for October 30th. Wow, that's pretty close there. So you're basically saying you're giving it a week to recover 295. I don't know, man. That's I think that's pretty aggressive. First of all, if you buy a call, you never buy a call out of the money. If that's the only thing you learned today, never buy a call out of the money. You're asking for this stock to go 7% in, let's call it, let's just call it 6 trading days. 7% in 6 trading days does not happen on FedEx very often. I can't get to it fast enough to actually give you the numbers on that. But I know it seems like that, but I don't think that's the case. And you need it to be over you need it to really be over 295, not just hit 295. So I don't like that one. I don't like that you're buying an out of the money call so short in and so far away. Short in time, far away. Great question though. I like that. I love it. Jason says, "Hey Dustin, what do the charts say about Coty?" Coty. Let's look at Coty. It's been a while on this one. Here you go. All right, so Coty, you've got a little bit of a low right here, or a higher low, I should say. I don't know that you have to rush into this. I say this all the time with these stocks that seem like they're bottoming out, but you don't have any volume, you don't have any news, you got earnings, of course, coming up. I'm one that says let it go for a while and catch it after we know the trend has changed. Let it get over $4 and then pull back. I'd rather miss it than dive in early. Granted, there's not a lot of risk there with $3 stock, but yeah, I'm not in love with that one. I know they're doing the best they can, rebuilding and doing all that. They paid a lot of money for that Kylie Jenner thing. I don't know what stuff's going on. Yeah, you got Intel after hours there. Once again, a disappointing earnings report for Intel there. AMD's just got to be soaking this up. They've got to be just partying away. So we're trading at 48.86. If you're taking a look here tomorrow, basically right in here at this prior low, that's where Intel's set to open tomorrow, right where my cursor is at. That's not a pretty sign there. Data center sales off, way off actually. So that's not, I guess, the worst news ever. There's nothing good I can read on Intel there, unfortunately, with their earnings. Yeah, they tried to raise their guidance. They tried to hold it, but man, that's and they're still going to do $2.4 million of their share buyback there. Wow. Okay, that's a tough one. Down 47% in the data center group there. Revenues down. Revenues were up 15%, but that's not going to cut it. That's unfortunate. Yep, Intel's going to be back to 49 right now, trading after hours. That is crazy. Crazy. That is interesting. Hey, by the way, before I roll here, let's see. I didn't check Gilead after hours. Should be up a little bit more. So we talked about them being at their lows, but 60.67. And after the announcement, we're at 63.10. Good for them. Okay, so going back to Gilead Sciences here, was the new 52-week low today, the only 52-week low. It is now trading 63.10, up about 4% after hours. That's a good sign. Good. All right, good for them. All right, that's what I have for you. That is so cool. I love that. All right, well, I'm going to wrap it up there. Thank you guys so much for watching. I hope you had a good day today. Learn something different. That's the goal. Try to learn something new each day. We'll be back later for the Wine and Wealth Show. It starts at 8 o'clock tonight. I'll get out of your way. You can watch the debate. It's all good, but I'll stick around and answer questions as long as I have to. You guys enjoy, and thanks for subscribing and all that good stuff, and see you later.